welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec, on Wednesday the 12th of August. We've got a slight, continuation of this dollar strength move that has been playing out in recent days. The treasury yields have been rising, sharp rise on the 10-year yesterday, moving above that 63.70 level of basis points. Well into the high 60s now. So subsequently we have seen the dollar rebounding, and that dollar bounce has sort of played out through major markets. A slight corrective move given the fact that the euro has gained ground against the US dollar today, but sterling is lower, yen's lower, and also Aussie and Kiwi are all under a little bit of pressure against the dollar. Nothing too decisive yet, but it's interesting that we've got the S&P 500 that formed a bearish engulfing candle yesterday, or bearish key one day reversal, whatever you want to call it. However, you've still got positive reaction to selling pressure seemingly as the futures have rebounded today, and that has really helped these European markets. Certainly FTSE 100 1.1% higher. DAX a little bit struggling, I think, on the euro rebound, but generally speaking markets are tending to be more positive today. Now the big mover in the last 24 hours or 48 hours really, but silver and gold, and they are moving again. Really massive volatility in the last couple of days on these two, and they've rebounded sharply once more today. So that continues to play out, and I'll talk about the technical implications of that on gold in my chart in a little bit, but certainly interesting moves nonetheless. Now, in terms of data points today, this morning we had the UK growth numbers out for Q2, and they were pretty eye-wateringly bad. 20.4% negative for Q2 GDP. Not very happy at all. However, there is slight improvement that you did see through monthly GDP for June, so that sort of tempered any sort of negativity around in that, and maybe sort of it certainly does set up for a rebound in Q3. However, how much of a rebound you get remains to be seen, because obviously half the country is still still working from home, and reduced services data. I mean, look at that services number for June, for example. Not all that great. So we're still sort of looking out for UK growth to be pretty terrible for the rest of the year, really. In terms of data points, other than that, you've got the US inflation numbers. Core inflation ticking a slight amount lower to 1.1%. Headline back rebounding to 0.8%. And then later in the afternoon, we've got the weekly crude stocks for the EIA. Another drawdown, 2.9 million barrels. So takes me on to my chart of the day, which is DAX. Now, I've been talking about how the dollar weakness previously has been helping US stocks. Now, euro, if that starts to also weaken, could that see the DAX benefiting? Well, we saw yesterday euro coming under pressure, the DAX stronger. It's now broken a little sequence of lower highs on the DAX, and all these negative candles are now sort of starting to turn positive. You can see that through momentum as well. MACD starting to turn up, stochastic starting to turn up, RSI in the mid-50s. And the move back above 12,915, I think, is an important one for the DAX, because that was a basis of resistance again, an old resistance back in June, another basis of resistance in July, and now means that it leaves behind a nice band of support, really, 12,750 to 12,915, to use as little near-term buying opportunities for a test of that 13,313. So this improving technicals really does point towards the DAX starting to gain a little bit of traction now in a recovery, and a test of the July highs could well be seen. So with that in mind, I wish you good luck.